See, when I teach my clients, I say, when you look at a deal first, don't look at what the investors are going to make. What am I going to make? So a lot of people get emotional because they want to do a deal. They haven't had a deal in such a long time. Oh my God, I've been looking at deals for over a year. What if we, okay, the rents are $950, but what if we take it to $965? Maybe we can push it that much. And oh, come on. Please check your emotions at the door, right? This is not an emotional business. Okay, that's wonderful that it's great for the investors, but you need to eat too.
This is episode number 05 of the Multifamily Success Stories podcast. Would you like to turn vacant units into cash and earn up to 3 times more per door without having to do any extra work yourself? We offer fully managed short-term rental solutions for multifamily investors. Go to managedbylux.com for more information.
Hey, this is John Bell
and Julian Sage,
and welcome to the Multifamily Success Stories podcast. This is a show where we talk to multifamily investors about their journeys and starting and growing their real estate empires.
Our goal is that you'll be able to walk away not only inspired, but with practical information to help you in your real estate journey.
Since we are a new show, please go over to iTunes and leave us a review and let us know what you enjoy.
And if you haven't done so already, go on over to our Facebook group, the Multifamily Success Network, to connect with the community. Hey, what is going on, deal makers? Julian Sage here. And in this episode, I had the special honor of speaking with Nitzan Mosery. Nitzan is the CEO of Cornerstone Investment Partners, an investment fund that has 150 million plus under management and has a total of 950 doors located throughout the U.S. In this episode, Nitzan shares his experience of how to become a multifamily investor with no experience, the importance of team building, and what his first multifamily deal was like. If you like my show notes for this episode, go to multifsuccess.com/EP05. Or if you like my show notes sent directly to your inbox every week, then go to multifsuccess.com/show notes. With all that being said, on to this week's conversation. Hey, what is going on, deal makers, and welcome to another episode of Multifamily Success Stories. In this episode, I have the special honor of speaking with Nitzan Mosery. Nitzan, would you please introduce yourself, let the deal maker community know who you are and what inspired you to get into multifamily investing?
Sure. Thank you, Julian. Welcome, everybody. Again, my name is Nitzan Mosery. I'm also known as a traveling investor. I've been involved in real estate, since I was a little kid. I like to say that my dad, used to teach us that there's 2 types of people in this world, those that pay rent and those that collect. And son, you always want to collect. I started my company, Cornerstone Investment Partners, about 10 years ago when I moved back to the States. I was living in Israel for a while. Moved back, started flipping houses, saw that was coming to an end, right? There's a lot of people getting involved in that industry. And then I knew about passive cash flow, but being from New York, which is a tenant-friendly state, I never really got into the residential or multifamily side of it. But when I moved to Florida and I started learning about other people's money and about syndications and different ways of structuring opportunities and projects, I went out and started building my multifamily portfolio, which is spanned over several states, and now we're focusing on the southeast quadrant of the U.S. and the mountain states as well. These are strong growth markets. There's a lot of job growth happening there. The mountain states are where millennials are going to now. Cost of living is a little bit lower, so this is a great place to go and invest. So, yeah, multifamily, it's a great place to be. People always need a place to live.
So you said that you got started in real estate at a pretty young age, and I mean that's some pretty profound wisdom that you were passed from your dad. Be the one that's collecting the rent, not paying it. How old were you when you got really started in real estate?
So I got started, I'd like to say, at the ground level, right? I was the guy that was cleaning the toilets, that was mopping the hallway floors, that was changing the light bulbs, that was doing all the little jobs, right? They say how, I started in the mailroom and now I'm the CEO of the company, right? That's kind of basically how it was when I was a little kid. And I was watching my father go and buy different office buildings, foreclosures and different projects, and how we would renovate them and what we'd need to do. And, I was the guy that, would go into the water tower and retar the inside of the water tower and do all kinds of things like that. So I learned from the inside how to run a building, how to deal with all the systems inside of a property, right? The water, the electrical, the plumbing, and windows, structural, all that kind of stuff. And then when I was about, my early 20s, my brothers and I, we bought another building in Manhattan. That was also a foreclosure in Chelsea, and we renovated that. We renovated the ones in Soho as well. So that was my kind of start into when I started acquiring. And then I went to acquire properties in South America, in Israel, and in the States as well.
I definitely want to talk about that. But just going back to, what you were about 10 years old when you said that you got started doing a lot of the more manual, it was more like chores to you probably back then. What was did that not put a sour taste in your mouth? Do you think that you would probably be doing the same thing with your kids, having them scrub the toilets and, grooming them to eventually own their own buildings?
Right. Well, obviously when you're 10, 11, 12, you don't want to be washing toilets, and you definitely don't want to be tarring the inside of a water tower, of a water tank, right? And at that time I said, yeah, I said, I'm never going to do this again. I can't believe I'm doing this. Oh my God, I'll never have my kids do this and whatnot. But I got to tell you, it instilled in me the knowledge and in the confidence that to be able to go out and to look at properties and to, understand and say, oh, you know what? I remember doing that when I was a little kid. That shouldn't be too difficult to do, right? Changing a lock shouldn't be that difficult. Changing a window is not that difficult if you understand the process. So why are you charging me so much, and why is it taking so long? So these kinds of things were embedded in me, whether I liked it or not when I was that age. But it does help in future, now that I'm actually doing this full time for the last 10, 12 years. Before that, I was doing other things. I owned the first raw vegan restaurant in Israel, and I used to work for Lehman Brothers in the 90s as well, clothing stores. But real estate was always in the background, right? Because it doesn't matter what you do. Working for Lehman Brothers, I was in a building. It's real estate, right? Somebody was paying rent, somebody was collecting rent. Doing all these different things, right? Having a restaurant was in a property. I had to renovate that property, right, to get the restaurant going. So all these different things, we're always dealing with real estate, if we like it or not. So it's best to learn it in the beginning. And it's funny, you talk about kids, right? So I have 2 daughters, and my wife is an artist. So one day my wife went to my oldest daughter, and she said, so, hey, Amelia, are you going to do what Daddy does when you grow up? She looked at it, she goes, no, Mommy, I'm an artist like you, but I'm going to marry somebody who does what Daddy does. I was like, there you go. At least you got it.
So it sounds like you've kind of done a wide spectrum of different type of real estate investing. Let's go back to your first. What was, 22 years old, you said that you were picking up a commercial building. What was going through your mind at that time, if you can remember? Did you feel like because of that experience that you had prior to just, working with your dad, was able to set you up for that? Or did you go in there, not really knowing what to do and just figuring it out as you went?
Well, that's a great question. So, I went in with my brothers, right? And my brothers were older than me. So it was great having mentors, right? And watching people who understood and knew what they were doing, and being part of that team. I brought my knowledge and my perspective and my understanding of the way things should be done. And they brought their expertise as well. And we kind of, melded that together. So, having a mentor, having a coach is super important. It could be a brother, it can be a father, it can be a friend. It doesn't matter who it is. As long as you find someone who has what you want, is doing what you want to do, and all you got to do is follow their footsteps, and eventually you'll have their success. So, what the experience with my father and the experience with my brothers definitely set me up to be able to see the pitfalls, see the landmines, avoid them when necessary. But obviously the firsthand experience, life experience, is the best teachers, the best university, right? I like to tell my mentor clients and my students that don't worry about making mistakes, right? Don't focus on that. You're going to make mistakes, and it's okay to make mistakes. Just don't make crucial mistakes, right? And if you make a mistake and you realize it, figure out a way how to fix it immediately. But don't get caught up on the fact that it's like, oh my God, I can't make a mistake. Because then you're never going to do anything, right? Then you're going to be frozen. We call it paralysis by analysis, analysis paralysis, whatever you want to call it, right? Where people They think they're going through the motions. They're analyzing 85 deals a week, but they're never putting out any offers. Well, what does that do, right? So it has set me up. It gave me the confidence to go out and to, you know, understand, hey, you know what, we're going to make mistakes, right? But let's minimize the risk. And how do you minimize risk? By doing your due diligence extremely, extremely well. You know, when I talk to my clients, I always ask them, I say, what is going to separate you from anybody else? Why would I invest in you and not the guy standing next to you when everybody's kind of basically doing the same thing, right? We're all looking to raise capital, buy good assets, renovate them, and whatnot, right? So what makes me special, or what makes me different than anybody else? Not necessarily better, right? Because there's a lot of people who are better than what I do out there, but what does it make me that makes me special, right? What is different, right? And one of the things that I talk about is doing your due diligence. You really got to go in and do your due diligence, because that's where you're going to find the nuggets. That's where you're going to say, okay, you know, this is where we can tighten up the reins. This is where we need to let go a little bit. Oh, look, check this out. If we fix this issue, we can raise the rents. Well, if we change the faucet, that's a $30 or $20 faucet. If we change that, we can add another $50 to the rent. Well, let's do that, right? So these little tiny things is what separates us and what will separate your listeners from anybody else, right?
You know, one of the things that you said was that you know, a lot of people get stuck in analysis paralysis, where, you know, maybe they're analyzing a bunch of deals. They're doing what everybody says. Everybody says you have to look at this many deals a week, and then, you know, if you're doing that many deals, then, you know, obviously at a certain point you'll strike that one deal that ends up, you know, being profitable. But some people, they can dive so deep into a specific thing that someone tells them to do, but taking that next step can always be challenging. And maybe they're really good at analyzing that deal, but none of the deals that they are analyzing, they're ever able to pull the trigger. What do you think is the difference, or what do you think is the difference between someone that is like really good at analyzing, doing their due diligence, from someone that's actually able to, you know, make that deal?
It's a great question. So let's start by saying it's a good thing that not everybody takes action. Because if everybody was taking action, right, we'd have nobody, you know, doing the other service-oriented jobs or other things that society needs to happen, right? So that's a good thing, right? But on a serious note, I believe that it's two things. One is the fear of success, and the other is a fear of failure. Okay, and what we were talking about just a minute ago is about making mistakes, right? You know, we have this, I don't know why or how, I know how and when, but why it was instilled in our brains is beyond me. But, you know, when you look at a baby, right? I have two daughters. So I went through this phase with them, and, you know, a child is born, right? And they don't have control of their hand, and they smack themselves and they poke themselves in the eyes until they get it, right? And then they take the bottle and they're poking it everywhere until they get it, right? Then when they're trying to stand up, they fall on their ass. They stand up, they fall. They stand up, they fall. They bang their heads. It's all about failing. It's all about failing. The first year of our life is all about failure. And people don't realize that. We are where we are today because we failed so many times at trying to walk that finally we figured it out. But when we got into the educational system, we were taught failure is no good. You got 2 wrong out of 10. Well, why not focus on the 8 right? Okay, so that was embedded in us. So now as adults, oh my God, what if I fail? What if I fail? I don't know. What happens if you fail? I failed many times, right? If you're in this business long enough, you're going to fail. And if you're in this business long enough, sometimes you're going to lose money. The point of the matter is, out of 10 deals that you do, if 7 or 8 of them are successful, or even 6, you're doing great, right? In baseball, if you hit 3 out of 10, you're an all-star, right? That means you missed 7 out of 10. So a lot of times people, they won't do something, they won't take action for fear of failure. How would I look to my friends if I tried to do that? You know, if I put a property under contract and I put money down and it went hard or non-refundable and I lost that money, how would I look to my friends and family? I would look like an idiot. Okay, but So what? So what? Go out, fail, succeed. Oh my God. Now I know what it takes to succeed. Go out again, right? You look at, how many properties have I underwritten that just didn't work, until, like you said, until you find the one that does work, right? And then you put that one on the contract and you get up to your due diligence and then something happens and you back out. Then you go again, and it's always moving forward, another step. But people will have fear of looking foolish a lot. And also it's fear of knowledge or a lack of knowledge, right? A fear of not having enough knowledge, of not knowing what to do, of not having a team. Oh, I don't know how to buy a $10 million property. Where am I going to get that money from, right? Even if I raise money from investors, I still got to come up with the earnest money deposit. I got to come up with money for due diligence, for the lenders, for the attorney. Where am I going to get all that money? So if they don't have the proper education to figure out how to do that, if no one's showing them how to build their team, how to get investors to come in and to put up money for the earnest money deposit, and how to get other people to do that, they're never going to do that. And that's fear, right? So what we have to do, and what this podcast is doing, which is fantastic, and what we do is we're educating people to show them how to go about doing this business so that they can be successful, so they can go out and live the best life that they can ever imagine, right? Now, fear of success as well. That's the other thing, right? Fear of success says, well, if I'm successful, that means that I have to change. I may have to give up some of the things that I like to do. I may have to sacrifice my friends. I have to sacrifice time, sacrifice going out and partying, sacrifice whatever. Well, yeah, that's what being successful is, right? If you have to put 10 hours into something and you're only putting 8 hours, well, it's not going to work, right? So fear of success. Now, people do things for one of two reasons, right? They're running towards pleasure or away from pain. Now, the majority of people are running away from pain, right? I'm not going to do this because if I fail, I don't want to feel that pain. So I'm not going to do that, right? I like to tell my clients, all right, let's see the fear of pain. How would you feel if you wouldn't be successful? How would it look into your child's eyes? How would you look, based on your network of people? What would be the perception? Now let's flip that. How would you look if you did succeed, right? You want to run away from pain? All right, let's run away from the pain of staying where you are. Let's run away from the pain of not having enough money at the end of every month. Let's run away from the pain of not being able to give your children the life that they deserve. Let's run away from the pain of giving your spouse the house, the life, the luxuries that she or he deserves. Let's run away from that pain, right? So that's kind of why people don't take action, And if you look at it in the world, right, it's a pyramid, right? It's a big pyramid. The most successful people at the top is 1 to 3% of society that is successful. 97% aren't. And it also has to do with the way we're educated in this country and all over the world, right? Maybe back in the 50s and the 40s and whatnot, you go to school, you learn a trade, you learn something to help out a company and build a company, be part of that company for the next 40 years, and then you retire. Today, it doesn't work anymore, right? That's not the way it goes, right? But yet we're still, the mentality is still go to school, go to high school, go to college, get your master's. Now you got to get a PhD because master's, man, that's old news, right? That was yesterday's stuff. Now you got to get a PhD. Now you get and what? Now you've got $300,000 or $100,000 worth of student debt, and now you're going out and getting a job that's going to give you $50,000 a year starting salary. Whoa. We're in investing, right? If I'm putting that much time and effort and money into it, and I'm getting only 50 grand a year, it's not a good return on my investment, So I'm a big believer today that you don't need to go to college to be successful. You might even be better off not going to college, right? I'm not pushing my girls to go to college, but what I am pushing them is I'm telling them, if you're not going to go to university, if you're not going to go to college, if you're not going to study, which is fine, you need to start thinking now at the age of 11 and 13, what kind of business, what kind of problems are there in the world today, and how can I solve them? And by solving them, create a company that will solve this problem, create a product and whatever it is. So you don't have to go to school, but you have to create something that's going to give you the livelihood and the sustainability that you need in life, right?
I wanna go back because there's, you got to have the motivation to be able to go out and do it. But once you have that motivation, and obviously people that are listening to this podcast, they want something, they want more. But a lot of people that maybe are listening to this, they are, they're analyzing those deals, they're doing what everybody says. Maybe, they found a mentor, someone that can help, say like, hey, this is kind of the next thing that you need to do. But as far as pulling the trigger and, taking that action, that's where maybe a lot of people feel like, how can I provide value to somebody else? Like, I don't feel personally confident enough to be able to go do a $10 million deal. So I'm going to find somebody that, has done that, has that experience, so they can, help me. But how do you, a person that, maybe you're really good at run the numbers, but that's all you're really good at, or you don't have that experience outside of just the things that, can get you stuck. How do you provide that value that somebody else is really looking for, to take that next step?
Sure, that's a great question. So when someone starts working with me as a mentor client of mine, what I do is we take inventory. Okay, I have them take a piece of paper, put a line down the middle, what I bring to the table. Okay, and they write all their strengths. Right. We're not focusing on their weaknesses right now. What I bring to the table: I bring time, I bring expertise, I bring numbers, I bring money, I bring a network of doctors that are ready to invest, and all I have to say is here, right? Whatever it is, I bring engineering background, I bring an architectural background, I bring a psychology background, so I know how to confront people and talk to people. Whatever it is, right? You create that list of everything that you bring to the table, all of your strengths. And then on the other side, you write down everything that you need, all your weaknesses, right? So for example, I'm a 30,000 foot big picture kind of guy, right? You asked me to go down and to start analyzing, little minute microscopic items and whatnot. I can do it, and I can do it well, but it's not what I like to do, and it's not what I want to do, right? So knowing myself, and this is the whole point of becoming successful. Becoming successful is not about the money. It's about the person you become, right? It's about being this little worm, cocooning yourself, and then opening up and transforming yourself into somebody else, right? So by what do I mean by that, and why is that important? Because we need to know ourselves. We need to know our strengths, right? We need to know what our weaknesses are. We need to know what we like to do and what we want to do and what we do best. And then once we have it down on a piece of paper, then I can go out and I can find partners, business partners that complement my skill set. So if I'm the analyzer and I don't like to talk to people, who do I need to partner with? Someone like myself who I don't want to sit there in front of a spreadsheet and computer, but once you have it, we'll talk about the numbers, we'll analyze the numbers, we'll see what the projections are, we'll see what the market does, we'll analyze it, we'll break it up in 22 different ways and look at it from all different points of view. And once we have our numbers and our pro forma and everything, then I'm the guy who'll go out and start talking to my network of investors, and I'm the one that'll do the webinars, and I'm the one that'll fly out to the property, and right. So my business partner, right, for example, we complement each other very well. She sits in front of her computer and she analyzes numbers and she looks at all the documents, and she's the one that says, well, there's a comma that was missing in between this word and that word on the third line. Really? That's how deep you go? Well, yeah, okay, because $11 million with a comma can be $1.1 million with the comma in the wrong place, right? So it's very important to have that. So what I'm trying to say is know yourself, know your strengths, know your weaknesses, and then and that's what I talk about with my clients, is building your team, right? First of all, we have to know who we are and what we bring to the table, and then we have to surround ourselves with people that are smarter than us and better than us, so that we are the weakest link in the chain. Then you can be successful, because then your partner will take your numbers and will say, okay, great, I'm going to write up the letter of intent, I'm going to put like this, and they're going to send it to the broker, because they have the relationship with the broker and they're talking to them and going forth and doing what they need to do. So that's how you take action. That's how you go about and If you're the shy person, find someone who's an extrovert. If you're a numbers person, find someone who's a people person. If you're, the engineering person, well, then find yourself a nurturing action taker, right? That's how you build a winning team. And in this business, as you and I both know, you need a team. You need a team to help you cross over the finish line. It's that simple.
Can you, because it sounds like you've done a lot of different types of real estate ventures, all over the world now. What has been your idea? Let's say you're going to a new market. You don't have any experience. You don't have any connections. Maybe you don't even speak the language. But you see potential. You have that big vision. That's your superpower. You're going into this new place, and I think you said one of the things that you started was a restaurant
in Israel. Yes, I started. I had a raw vegan restaurant.
And do you speak the native language?
I speak Hebrew. Yeah.
Did you already have the connections there, or was this something that was completely new to you?
It was completely new. I'm not a restaurant guy, right? But my business partner was a chef, and he was the restaurant person, right? I was the guy who was on the outside serving the drinks at the bar, making sure that the people, when they ate, when the food was served, it was served warm, it was served cold, it was served correctly, it tasted good. Can I get you anything else, right? So that's what I was doing. He was the guy in the back, making sure that the food was coming out right. He was creating the menu, making sure that the numbers worked and all that. So again, you have a team. Right? So in your business, right? I love hearing other people talk, and I get ideas. And Tony Robbins has something that I really one of many things that I took from him is, in every business you have the entrepreneur, you have the leader, and then you have the artist. You have to figure out which one are you, and then go get the other two. Anywhere in the world, for any business, for any venture, 3 people: the entrepreneur, the leader, and the artist, right? The entrepreneur has the idea, has the money, has the backing. The leader is, the person that's going to say, okay, give me the business plan. I'm going to go out and run. I'm going to find the people. I'll build the teams. I'll find da. And then the artist is the person like you and myself who is standing in front of everybody, in front of the room, in front of in the restaurant, taking care of people. The artist is not the entrepreneur. The leader is not the artist. Now you can be, right? You can be the leader and the artist at the same time, right? You can be all 3 when you're just starting out. But then eventually, if you want to be the entrepreneur, then you got to find the leader and you got to find the artist, right? So in the beginning, I know in the beginning I was all 3. I brought in my money. I had the plan. I worked the plan. And then I was out there talking to people, raising money and putting myself out there, right? Now I divvied that up into different things. And I have I'm still the entrepreneur and the artist, but I have a leader, right? He's my CFO as well. And we talk. He's like, okay, so this is what we're going to do. And this is blah, 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 blah. This is a punch list that we need to create. This is a system that we have to put together. I'm like, rock and roll, brother. Let's get it together. Let's do it. Right? So find out what you are: entrepreneur, artist, or leader, and then go out and get the other 2 and build your team.
What has been the most challenging deal that you've ever done, or the most challenging real estate venture that you've experienced so far?
Challenging. Well, I like to say that it's probably the first multifamily deal that my partner and I did. It was a 27 unit in Leesburg, Florida. It's about an hour north of Orlando. Now, mind you, I've never heard of Leesburg, right? I just moved to Florida from Israel. Have no idea about nothing. I was flipping houses, right? I had hard money lenders and all that for multifamily. And then we got so one day, so when I started doing multifamily, the first thing I did was I told everybody in my network, lenders, investors, friends, family, everything, what I was doing and how they could help me. So one day I'm talking to my hard money lender and I said, hey, listen, if you ever come across a multifamily apartment complex in a good area that has some upside, I would like to, please send it my way. He goes, actually, you know what? I have this 26 unit in Leesburg. It's a 19 cap and blah, 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 blah. I'm like, I don't know, Leesburg. What the hell, Leesburg? Like, okay, let me know, blah, blah, blah. Hung up the phone. A couple of days later, I'm thinking about 19 cap? That's really cheap, man. That can't be right. I called him back. I said, what's the story here? Well, the owner is a old lady. Her husband used to run the property. He died. The property management company and her attorney are taking her for a ride, and she just wants out. I'm like, okay. So my partner at the time was living in Miami, so she drove at 4 o'clock in the morning, picked me up here. We drove all the way to Leesburg, walked the property, did everything. We put her on the contract, and to make a long story short, the day our money went non-refundable, our earnest money deposit, that was the day that we found out that the subsidy from the USDA, from the Department of Agriculture, the property, the actual property had the subsidy. Now, it's not like a Section 8 where the tenant has the voucher. The property had the subsidy. So the day that our money went non-refundable, we found out from the Department of Agriculture that the day that we take over, the subsidies cease to exist. That means that the income is zero because the subsidy paid for 95 to 97% of the income of the property. Well, that's not what I'm buying. I'm buying a property that has this type of income, generating every single month, and this is the expenses. And now you're telling me that the day I take over is going to zero. Now the thing of it all is that the tenants, the residents that were living there, old war veterans, Vietnam vets, sick, elderly people, people that had tubes coming out of their chests and medicine cabinets full, and they had no money to move, right? So here they are. We would have to evict them when we take over and reoccupy the entire property. That's not what happened. So we started freaking out. Remember, this is our first multifamily deal, right? I'm lucky I had a mentor and a coach. So started calling everybody. What do we do? What do we do? What do we do? We got guidance. We did what we had to do. We went back to the seller and we said, listen, you knew, your property manager knew, and your attorney knew. Now, either you give us an extension so that we can go out and take care of this subsidy, or we're going to file a lawsuit for a specific performance and we're going to win the property. And then I don't care if it's making zero money. We just won that property and it's ours. So it's up to you. You decide, because you left out material fact that changes the whole deal, right? So they said, okay. So they gave us an extension until we were able to get it. And we finally were able to work with Section 8 and the USD and get the residents their vouchers so that they could stay. And then at that time, we said, all right, you know what? We don't want to deal with this property anymore. We turned around. We found another investor. We flipped it to them. We grossed 80 and we netted, I think, like 65, 60, something like that. That was our first hairy deal. And you learned a lot from that. You learned a lot.
I mean, that's a whole different world. And I mean, can you go back, because you said that you were, prior to this, you were doing real estate flipping. What's your mindset from, real estate flipping to multifamily? Because the things that you're experiencing in the multifamily space sounds completely different than what you would deal with if you're just, finding a home and flipping it.
That's right. It's completely different, right? When you're flipping homes, you can be a one-man team. One man meaning I can go out, I can analyze the property, I can look at it, then I get my crew to come in to do the work, right? I tell them what paints to put on the wall, what cabinets, what countertops, all that stuff. I go out, I'll buy the appliances. I don't really have to answer to anybody else, right? And it's pretty simple. You look at the comparables in the area, you know what to sell it for, you work backwards, you know your purchase price, the expenses, and blah, blah, blah. Very simple, right? And this is why it's also very important to have the right person as your partner, to have the right people on your team, right? This was the turning point for both myself and my partner to know who the other person is, right? Was my partner the kind of person that at the first sign of stress freaks out and runs away and sticks her head in the ground and run away? And she was thinking the same thing of me, right? Because this is the first deal that we're doing together. But here we are, we're both sticking it out. We're both doing whatever it takes. Stress. What do we do now? I don't know. Let's make one more phone call. Okay, we made the phone call. Okay, well, what do we do? I don't. Let's talk to this person. Okay, what now? Let's talk to that person. Let's talk. And we just kept putting one foot in front of the other. Now I have a rule, right? When things go sideways, and they usually do, right? When you have something that has so many moving parts, you're allowed to say "holy shit" 3 times. Holy shit! Holy shit! Holy shit! That's it. That's your freak out. You're allowed to freak out that much, and then you're like, okay, I freaked out. Now what do we do, right? Because the mind that focuses on the problem cannot be the same mind that focuses or finds a solution to that problem. So, and you can't block that emotion. You can't keep it down, that frustration and that anxiety of like, oh my God, what the hell just happened, right? Because then it's always going to be there. It's going to be bottled up. And that's where you're going to, that's the place of where everything is going to now come from, right? So release that anxiety, release that panic, release that stress, release that like, holy shit, what are we going to do now? Feel it, enjoy it, right? Because this is what life's about, right? Experiences. And then be done with it. And then do a mental switch and say, okay, now what do we do? Okay, I'm a business owner. I'm an entrepreneur. I'm an investor. What are we going to do? How are we going to solve this? And if I don't have the solutions, I need to find people that can help me find the solutions. And let's get into solution finding mode. And that's what you got to do. It's as simple as that.
What do you see as the biggest mistake? I mean, you work with a lot of people and trying to help them get to where they want to be. What's the biggest mistake that you see new real estate investors doing at this time?
Getting emotional about properties and about numbers, right? When we're getting involved, I want a deal, I want a deal, I want a deal, I want a deal now. Oh my God, I want a deal, right? And then they find something and they're so excited that they found it. Look, I got it under contract. Wow. Blah, blah, blah. And I go to them, I go, yeah, but dude, look, you know, oh, but it's great for the investors. Okay, that's wonderful that it's great for the investors, but you need to eat too. See, when I teach my clients, I say, when you look at a deal first, don't look at what the investors are going to make. What am I going to make? Am I going to be able to feed my family off of this deal? Because it's going to take a lot of time and effort to manage this deal, right? To properly put our business plan into action. It's going to take a lot of time from me and my team. So is it going to be profitable for us? Now, if it's profitable for us, okay, what are the numbers, right? So a lot of people get emotional because they want to do a deal. They haven't had a deal in such a long time. You know, oh my God, I've been looking at deals for over a year. You know, what if we, you know, okay, the rents are $950, but what if we take it to $965? You know, maybe we can push it that much. And oh, come on, it's Please check your emotions at the door, right? This is not an emotional business, right? We're not life coaches here. We're not psychiatrists and psychologists and things of that we look at emotions and the mind. No, this is dollars and cents, right? Everybody else is selling their building that was built in 1985 for $80,000 a door. Why am I buying this one for $100,000 a door when it's also built in 1985? Why? Right? It's not because I like the color. So we got to find out why. The numbers don't work. Well, if numbers don't work, the numbers don't work. Don't try to make them work. They will never work. Okay? So don't get emotional. And I see people trying to do everything on their own from the get-go, right? You can't do this by yourself. You have to have a team in place, okay? People think that they can do this without having a coach or a mentor. Some people can. Most people need someone. Need someone to hold them accountable, someone to talk them through things, to give them a different perspective, right? And a different outlook on things. So those are some of the mistakes that I see newbies making, right? And a lot of times, when I'm talking to people, they'll tell me, oh, you know what, I've got a whole group of investors, or, you know, I put a property under contract. Okay, so now go and raise the money. No, I need a sponsor, I need this, but I don't want to give up any of the deal to anybody. It's all going to be mine. Oh yes, you're not going to be able to do that, right? So knowing that you've got to come and build that team, right, is very, very important. Okay. Those are some of the mistakes people make.
You know, not everybody though. That, you know, a lot of people, they get into multifamily investing because they hear the passive returns. I mean, I think that there's a difference from, you know, just to clarify, there's a difference from being like an LP, a limited partner, versus being the one that's running the show and building a business. You say you're building a team. There's a lot involved, but you know, people that are probably listening to this show right now, you know, maybe this is their first experience. Everybody says, oh, you got to get into multifamily. It's economies of scale. It's so much easier. You know, why waste your time doing a bunch of single flips when you could, you know, turn one building that has a bunch of units. But you know, maybe they don't have like that experience. You know, maybe, you know, some of what they could offer is, you know, like what they have on the resume. You know, they do exceedingly well at Microsoft Word, or, you know, they've watched a lot of YouTube videos, or they listen to a lot of podcasts. Maybe they've gone to some conferences. How can you be a person, or how do you offer yourself to someone when you found a deal, when the numbers make sense, but you don't have any other experience?
So if you're just finding the deal, you got to know that you're probably going to have a small piece of the pie, but a small piece of the pie is better than 100% of nothing, right? I would rather have a small piece of many pies than 100% of no pies, okay, of $0. So when somebody has, we're told also, right, we always hear the great saying, oh, find a great deal and the money will be there, right? Well, how's the money going to be there if you don't talk to people, if you don't have a network of people to talk to? If you only have 3 or 4 friends, how is the deal going to be there? Because no one knows you, no one trusts you, no one knows your track record, no one knows who you are. When you're partnering with people, this is a marriage. This is why we have agreements and everybody signs. And what do the agreements say? How do we get into this and how do we get out? Right? Just like a prenuptial agreement, right? When you're getting married, this is what we have when going in, and if things go bad, this is how we get out, because it's a marriage. So you want to make sure that the team that you've got going on is in the same mindset as you. Does that make sense?
And what would you do differently if you had to start from scratch?
I would create my team faster. I would go out and build relationships with real estate funds, with other big family offices and whatnot that would build those relationships that they could invest with me. But also I would go out and I would find other syndicators that I had relationships with, that I could connect with, that I liked, that I knew were doing the business really well, and I would team up with them. And I would get my credibility fast through them and just help them do more deals, because that will then make it that I do more deals, right? So if you're someone that has a property and you don't have anyone, well, you know what? Before you get that property under contract, go network, go build your team, go find your sponsors, go find your investors that will fund the earnest money deposit, go find your investors that will fund the equity for you. Go build relationships already with mortgage brokers, right? With insurance brokers. These are the people that you need on your team. With real estate brokers, with property management companies. These are the people that you need to have on your team, so that, CPAs, right? CPAs, they have clients. They know who has money and who doesn't have money. Build relationships with a handful of CPAs and go, hey, look what I'm doing. Would you mind turning this on to a couple of your clients and see who would be interested in investing? But you got to do that before you've got a property in the contract, right? Because once you have a property in the contract, you got to come up with the earnest money deposit. Now, if you're doing a $10 million deal, that's $150,000. You got that in your back pocket? There are people that have it. Maybe not one person. Maybe you got to talk to 2 or 3 people and give them a piece of the GP as compensation, right? You make them part of the deal, right? You bring them in, you make them a partner of the deal, right? So that's how you go about doing it.
Do you think that people should be waiting until they are able to do more themselves, like when they do have enough to be able to afford that earnest money themselves? Or should they, don't have any experience, don't have maybe the money even right now, and try and go out there and sling a $10 million deal?
If you don't have anything, I wouldn't necessarily go out and jump to a $10 million deal. It's a good goal to have, that, within 2 years from now, I want to be at a $10 million deal. And this is how I'm going to do it. My first deal is going to be a $3 million deal. My second deal is going to be a $5 million deal. My next is going to be $8 million, and then $10 million, right? Whatever it is. I also tell my clients, I say, look, if you don't have the network of people that can fund a $3 million equity raise, why bother going there? Why bother setting yourself up for failure? If your network right now you can only raise $500,000 from your network, well, then go out and find a property that you can close on with $500,000. Show these people that you can move their money. Show them that you can be successful, because then they will turn around and they'll talk to their friends, and you'll ask them, hey, who else do you know, right? And then you can start growing your deal like that, right? I also tell a lot of my clients, well, I want to make $10 million. Say, okay, great. Have you ever made $1 million? No. Have you ever made $500,000? No. Have you made $100,000? Nope. How much was the most you've ever made? $50,000. Okay. So $10 million is a good place to be at, right? It's a good goal to have in the distance, right? But let's start with maybe achieving $50,000 worth of acquisition fees or income, and then focus on 100,000. And once you made 100,000, now you can say, all right, I know what it's like to make $100,000. So if I put 3 or 4 times more work into it, I can make 3 or 4 times more money. Okay, great. Boom, you made $500,000, right? Now you're like, wow, that was a lot harder than I thought it was, right? Because people think, oh, $500,000 is nothing. Come on, I can do that. Blah, blah. And then they're like, wow, making 10 grand is a lot of money. Shit, making $500,000. Wow. And then going out there making $1 million a year. Oh, right. So it's a good place. You want to shoot for Mars. You want to shoot for the moon. That's awesome. But let's try hitting those coconuts right there first. Right. They're about 10, 20 feet above your head. You got the coconuts. All right. Let's go for the clouds. Let's go for the stars. Right. Step by step by step. Right. Now, of course, there were people. I met a doctor who was getting involved in multifamily. He was a cardiologist, and his father was the head of the neurosurgery or something like that in the hospital. So they have in their back pockets over 100 surgeons and doctors that are all from India, that they all know each other. They all hang out, right? But he doesn't know multifamily. So I told him, I said, find a sponsor. Be the guy on the team that raises capital, right? I mean, everybody on the team is raising capital, but find someone who's already doing it, right? Partner up together, go out, find a deal, put the whole package together, and you've got your money sitting right there. And he went out to blow it out of the water because he had that backing, right? And that's why it's important to have that inventory list of what do I bring to the table and what do I need, right? So he had a whole network of people. He needed the experience, the track record, the accountability, the know-how, the knowledge, the team of real estate. He was a doctor. He went and found somebody. I was hoping that he would team up with me because I gave him that idea, right? But he found somebody else to work with, which is fine, right? I'm here to help people, right? The more I help people, the more my success will grow. I'm totally happy for him, right? I enjoy watching people succeed, and that's what he did. He found somebody on his team, found somebody that needed his skill set. He found somebody that he needed their skill set, and they married, and now they're out and they're doing deals left and right. So find yourself a partner.
Awesome. Well, I thank you so much, Nitzan, for taking all this time. What would be the best way for someone to be able to reach out to you if they have any more questions, or if they want to find out more about Cornerstone or even the work that you do with clients? Sure.
So my investing website is www.investwithcip.com. My mentoring website, which I'm revamping right now, is www.traveling-investor.com. Okay. And you can reach me at success@traveling-investor.com or Nitzan, Nizan, @investwithcip.com. And you can also find me on all social media networks like as the Traveling Investor: Facebook, YouTube, Instagram, LinkedIn, Twitter, and now TikTok.
Very cool. Yeah, I definitely got to follow you, Nitzan. I don't have a TikTok yet, but I feel like I should probably get one to see what you're posting on there. I've seen your YouTube channel. It's entertaining, definitely. But I'll include everything in the show notes. And thank you so much again. And until next time, deal makers. All right, talk to you next. Bye.
Thank you.
Hope you all enjoyed this episode. If you did, please go on over to iTunes and leave us a review, as that greatly supports the show. And if you'd like to be able to connect with John, the community, and I, then come and join us on our Facebook group, the Multifamily Success Network, where you can connect and make deals with other multifamily investors. Go to multifsuccess.com/community.